Good to go?
Yeah.
All right. Okay, so welcome everyone to this new video series we're starting called Discussions with a Retail Trader. I'm sure that a lot of you basically wonder about the different profiles and backgrounds of people who trade options, who are into investing in the stock markets. And so we thought that what is better than to actually talk to some of our members and actually learn about their experience. So for our first episode, very happy to welcome Marek. Hi Marek, how are you today?
Hi, I'm good. How about you?
Good, thank you. Glad to have you. So let's jump right in. Marek, can you first of all just introduce yourself?
All right. So I'm Marek. I live in Prague, Czech Republic. I'm 31 years old, and I started basically trading in 2019.
Nice.
And I joined EarningsWatcher in July, so I'm
Yeah.
pretty new member.
You're somewhat of a new member, so but you jumped right into the strategies, etc. Showed a great enthusiasm, so we're happy you found us. And funny, so first to note that Czech Republic is not the first country people would think of when they think of retail trading, but just goes to show how it's really international. How popular is this retail trading there yet?
There are some, but I think it's like compared to US or like
Okay.
Germany, investing and trading is not really popular. Like most of the people, like if they think about investing, they think about real estate mostly
Good.
or some other thing.
So can you tell us how did you get into trading or investing? How did you start? How did you get into all of this, basically?
Well, I think I started like looking at the markets or getting like the info and stuff maybe 2017 18.
Okay.
Like maybe seen some advertisements or something that it exists, so I started looking at it and learning it.
Good.
So there was some with period of learning before I started, and in 2019 I started with CFDs and forex.
Okay.
So I had some success with the CFDs, but the forex is no, it wasn't so great.
Didn't go well. So why did you start with forex? Just on that, was that the most popular thing you saw, or what influenced you into starting with forex and CFDs?
I think it's very like easy to get into like
Okay.
forex. It's easy, but it's also really complex.
It sounds easy,
It's
or that's how
yeah, it's easy to get into. You don't need to learn like so many stuff with trading stocks.
And then how did you transition to say options and?
Mm, I had one colleague in work that he was doing options trading,
Nice.
and at first it sounded really like difficult and like very deep and so much different info. So I started to looking at it. I have this like Czech website that is free and it's very long
Nice.
and complex.
Okay, so for
So
resources, basically for
yeah,
option basics in Czech. Okay.
yeah.
But I'm sure this will help and relate.
Hmm.
What's your background? So what do you do in this colleague, etc. that you met? What's the field you're in general?
Right. I'm in software testing
Okay.
uh, in a bank.
Okay.
So
So
it helps a little bit,
I
but
guess the bank
not
aspect
that much.
déjà helped
Yeah.
to get you into the atmosphere of it, and then I believe the fact that you already handle software, etc. You have sort of a background, a bit of a technical background, and we find that a lot actually in a lot of people. Folks with a little bit of even a little bit of technical background who basically get more easily comfortable with these notions. This is why, just so for people watching us, it could take more than 2 months obviously, or as you did in your case. However, in certain cases, depending on your background, these things can be easier to take on. And does your colleague still trade nowadays, or how is he doing?
Yeah, he had small break, but he still trades.
Good. Do you remember your very first option trade? Very actual trade you took with actual money. How did it go? I'm sure it left some impression in you overall. No.
Yeah, I started with just basic long calls,
And
it was some long dated calls. I think it's the easiest transition from stocks.
yeah,
It's just very similar. If you go deep into money, buy for, I don't know, 400 a days, it's basically behaving exactly like a stock.
But so why did you choose? So do you remember which stock was it on?
I bought Global Payments and SoFi. Global Payments, it went like pretty well for a while, and I exited the trade, and after that it collapsed like 50%. And the SoFi, it went really great. Like I bought at the time, the price was like 7 or something, and now it's in the high 20s.
But then let me ask you, what was it based on? Why did you choose these names and bullish approach, not the opposite? What was the edge there, or your thesis when you were playing this?
I basically looked at the fundamentals of the company. So just I think that these names would do very well.
Okay.
Because SoFi is like internet bank in the US, and like for me, as I work also in banking,
Nice.
and I
Okay.
see like what I would want from a bank, or what people like from the bank, especially the younger generation. I think they have really good market edge.
I think
And
that's
for
actually
global,
a great point. Yeah, go ahead and finish for a great moment, we.
yeah, the global payments, I think it wasn't really good big. Like at the time, I didn't have the enough fundamental knowledge to see that the price wasn't that cheap as I imagined.
Got it. It's actually a good point you bring up where here it's funny how your first trades in option are not necessarily, how you say, option strategies themselves. You basically used your fundamental analysis and so your own also personal knowledge about specific sectors, etc. So to do this analysis on stocks, but then you monetized your view with options. And as you said, it's because it offers way more leverage, it offers way more returns than same thing on just a stock. So that's a good point for our audience to see how this option knowledge also doesn't only allow you to take sophisticated option strategies around earnings and stuff like that and all, but also it can be a simple way to monetize your views on a certain aspect. Also, I believe this company is good or bad. I believe this trend is not building or not building. So yeah, happy for you. It can be called beginners luck. The first trade works very well for you, but at least it got you into the market in a good way. Now, symmetrically, in those days, or even perhaps later on, do you remember a trade that did not go your way, or there was sort of a mistake on your end that you did, and so hopefully you learned from, or that sort of impacted you as you did it?
Yeah, like similar example for these like long calls I bought a while ago is Evolution. It's a Swedish company that they basically like operate online casinos.
Nice.
And like the backend of things.
Okay.
And the price like collapsed a lot.
Of course.
They have some difficulties basically, and I think I'm like maybe minus 80% on the long call. So that's like the opposite side of things.
But it's a good example to show how not all long options go your way. and actually, what we say, most of options expire worthless. So it's actually there's way less stocks or options that actually deliver and actually grow. The same stat is also correct on stocks, by the way, that most companies fail actually, and not the other way around. And it's really a very small subset of companies that succeed. But still good that at least you, in your first trades, you picked a winner and also a little bit of a loser, so you're able to see both. I imagine a world if all of your first trades were losers, perhaps you would have stopped and said, I'm out of this and I will not do it anymore. So good that at least you had some motivation when you started in. So let's talk a bit more about...
That's exactly what happened with the Forex. Because it wasn't like profitable. It was like break even or
losing, basically. So you said,
yeah. So it's just not worth the time. And I decided to quit after.
It's a great point. While, I'm sure it also correlates or is related to the fact that, as you said, getting into Forex is much easier. There is not really, as much fundamental knowledge or things as you would need with options. And so the temptation can be big to get into it. But then since you also invest less, and less discipline and less consistency into learning these things like you did with the website and the different content you went through, I think there's also a psychological, level to it, where since you didn't invest in it, and you believe it's either easy to get in, easy to get out, it sort of simplifies the exit. While options, you see that they're more sophisticated and they offer way more things to do, and you put in this work to learn them, and then it makes you also stick more to it and give it more attention. So now I wanted to ask about your current trading routine, how you trade nowadays.
I also started to do like another strategies as, for example, the wheel. If you're familiar with it, it's selling out of the.
So you can remind our audience. I think it's actually good to a lot of beginners, let's say in options, go through this phase, what we call the wheel.
Yeah, so it's just you sell out of the money puts, and let's say if you are assigned, then you can either wait a bit and then start to sell calls. Voilà. You can do it right away.
So it's really a strategy that sort of comes complementary to a belief in a certain stock. That's why, I don't know what's your opinion on this, but how did you find the stocks that you do the wheel on? Was it from your personal choice of I like the stock and I want to hold it, etc., or we see this a lot on social media? People will pick these stocks to do the wheel on, depending on how high their implied volatility is, how the sentiment is. What do you prefer? What's your approach?
I think it's good to know the fundamentals or what the company do. I don't think it's good to just pick something you don't know nothing about. It can create extra risk.
That meme where it says, when you buy a stock for a strategy and then you become a member of a community of bag holder. Basically, voilà.
Yeah. I think it's good to go into this a little bit slowly and not to start with like huge positions, like to be mentally prepared for losing this amount of money.
So my first question is, how did you get into earnings? How did they get into your radar?
Yeah, I think I saw some like the weekly analysis from EarningsWatcher.
Mm-hmm.
It could be like X or Reddit. I don't know where I've seen it, and it sounds interesting.
Once you got into it and you started learning a little bit, did you have some misconceptions basically about earnings trading and earnings in general that turned out to be not correct, or maybe correct once you learned more about it?
I think I already knew enough about options at this
Mhm.
time that I wasn't surprised by any like the behavior of the options. It's really good to know before, like the IV rush, IV crash,
Well,
and how the volatility changes and the moves also. I started with long volatility plays. I think it's the easiest. Like if someone doesn't have a lot of knowledge about
yeah.
earnings, mm, it's the easiest thing.
So
And
long
also,
volatility is really a good transition from buying just calls or puts. Now you buy both, and
yeah,
you are betting against IV crush, and so it's not just the direction. Now it's the amplitude, and so we see how it's the implied move and the average move and things like that. Okay.
yeah. So basically, for the long volatility, I think the straddle was my favorite
Mm-hmm.
for a couple of months. And maybe now my favorite is inverse iron butterfly. It's when you buy straddle
Mm-hmm.
and sell out of the money strangle.
So
So it's
you're capping, you're
yeah,
reducing basically your cost and lowering your break even. Exactly, a good
yeah,
point. So you really like the strategies that go through the release. Basically, you like holding through the release.
yeah. But I think the IV rush. It's something I didn't know before I joined the EarningsWatcher. I think this
Cool.
is the easiest uh, and maybe most beneficial way to play the earnings because
It's
it's
definitely
really data dependent.
it's perhaps the concept of it, of what is IV rush and why it happens and how it happens. Perhaps that's the central point that people need to understand and you need to spend time understanding. But it's really just a phenomenon basically that happens in the market. And as you said, um, uh, so core volatility strategies, long and short volatility, these are really statistical plays basically. So there's really no a specific advantage in one name versus the other. When you pick a stock to sell options on or buy options on, what we're playing, as I'm sure you know, is the statistical aspect that statistically the distribution of moves looks like this, and so in X% of the case the moves should happen this, and so we're trying to take advantage of this general behavior. And so it's really about playing these patterns week after week, and not putting everything in one trade, for example. I think, Marek, to wrap up, a lot of people would be interested to see a classic workflow you would do to choose these names, for example, for any strategies that you're interested in, and so the different steps. So can you, just walk us through the main things you do in your routine? I'm sure a lot of people are interested in seeing concrete examples.
Yeah, I think there are, let's say, two ways how to go about the earnings.
Mhm.
Either you have the strategy in mind and you search for the correct stock, or you search for the stocks and then you apply the strategy.
That's a great point.
Yeah, so if you look at the trade desk that is like announcing the earnings today
So it's today is
after
the last trading day before the release for TTD.
right, so after market close they
Yeah.
announce their earnings, and if we see there's 10 years in the past and average move is 20%.
Big mover.
So yeah, and then we look at the implied move. This is 16. So by the like first look, it's it tells us it's underpriced.
Yeah.
I really like to take a look at the last 2 years because it's the most like current.
Hmm.
So we now
Even
see
better
it's
now.
even more. It's 22. So and when we look at the past, I don't know, 3 earnings, then the amplitude of the moves were really high.
Yep.
Also, good point to note that this is the maximum move. and it's very difficult to hit the maximum move.
Yeah.
Like I think it's better to go uh, and look for the average move and maybe for the standard deviation. So
By the way, a lot of people do this approximation. Basically, they say a realistic maximum move is the average plus standard deviation, and a realistic minimum is the average minus. So we can use that as sort of benchmarks of what's big and small.
right, it's the on the simulator. I think.
Okay, so now after
here.
you do this quite a quick analysis on the name, you found that over the long term, the long 10 years, it's undervalued. If you filter for just the last 2 years, it's even more undervalued.
Yeah. So I think like these two indicators or info is really good for like figuring out if we want to take long volatility position or short volatility position. If you go long volatility, I think you want to see the last implied move to be lower. Also, you want to see the past the lower average move also to be lower. Also, the actual versus the implied. It's like info to choose your correct strategy. I think for this, it would be better to go with straddle or strangle and not limit the upside.
Good point.
If it's
Good point.
If it's beats, it can beat by a lot.
That's a great point. And yeah, you're saying because that number is quite high, because it tends to really move a lot, you choose here, you don't want to limit your upside. So you can just leave it open with a straddle, a strangle.
I also note that the move direction can be also useful. If you see the announcement and they either beat or miss. Yeah, sorry.
Yeah.
And you see what's the average upward move and downward move, so you can like use this with the average moves and with the standard deviation.
Yeah, that's a great point.
You know that the downward move can be bigger than the upward move, but you never know like what will happen. So it's just like small pieces of the puzzle to make
exactly.
the whole picture.
The best we can do is really prepare based on all of these numbers. Prepare all the possible scenarios, and then even if it goes against us, even if the numbers are wrong, the idea is, as we said, statistically this approach is correct or is statistically correct when we do it in high enough volume or for enough names. So it's really not a matter of will TTD really stick to these numbers. The question is, stocks like TTD usually will stick to this behavior. So that's really the edge here. So yeah, that's a good point, Marek. And then, so you said, you showed, you moved to the simulator. Now, for our audience, this is an option pricing simulator, and it models the IV crush, basically, of earnings for every strike and expiration. So we really can simulate how any position will behave going through earnings, basically.
Right. And like, if you like want to see, let's say, the strategies, how they compare against each other, I think it's easiest start to just press classic strategies, and you can see here like the other basically strategies, long or short, and straddle or butterflies and strangles. And I think you can just pre-pick something and see like what is the like risk reward ratio.
Yeah, you can actually start your selection from that. Just quickly looking at how, when we talk about risk reward, obviously we're talking about the P&L at small moves and the P&L at big moves that we were looking at in the moves analyzer. So this is a bit pre-configured for you. This is a good point, yeah? And so in your case, you said this is the name for a straddle or a strangle or these types of play. You don't want to cap your upside here.
Right. So there are two ways to go about this. I think the easiest is just to pick the straddle, because you don't have to like calculate the moves and the probabilities. It's just the most basic. And the second option is like go more out of the money if you think they going to have a big move.
Yeah,
Or you can just like pick both. You can like buy straddle and strangle, and if you are just split between those two, you can just buy both.
There's also your capital allocation. So whatever you decide with, one is the white strangle is really more like a make or break. It will either print a lot or it will lose all. The straddle is a bit more conservative. Okay, so you open here the straddle, I think 47 put and call for the closest expiration. Okay, and so what do you usually look at here?
We can start and look like what is how the position gonna behave after the earnings if the move is zero.
So this is, you see, the worst case scenario if really no move at all, which is quite unlikely, but this would be sort of a black swan event for a long volatility. The stock did not move at all. Very weird.
Right. Like you can calibrate and see like tomorrow if the price stays the same. This is like there is a high chance of probability that you will gonna lose like 80% of the position.
So this is what we said earlier. If you go with these positions, you should be ready for that number. There is really, if you're not comfortable with it, don't go with a position like this. You can go for inverse butterfly, things like that. But there is no way. There is no weight of taking this position, and then tomorrow, if really the worst case scenario happens, there is really no way to try to fix it. Then it needs to be fixed now. So if you don't want it, don't go into it. But then depending on your allocation and your risk tolerance, it can be also a play to take. Okay, and so now you can also simulate, I guess, the good positions. Voila. Okay, what would a good scenario?
Yeah, we can just put maybe 23%,
which was the last move, I think, or in the last three moves of TTD.
Right, there is 40%, so we can just
even higher.
Put it at 40%.
That's really the extreme, or say
that's a lot. Yeah.
So here you see even for 20, so you have a reward around 60%.
Yeah, 66% of reward when the stock moves 30% on the upside. So it would be somewhere around the average of the last couple moves, maybe something less.
Yeah, good point.
And if we look at the average and the standard deviation, that would mean like really a big move. So if we can put like 22%, how the average would look like, we are looking at 22% on the position.
Because the straddle is itself undervalued, basically, from the low break even that the 17% you saw, 17, 18, compared to the average move, it's undervalued, and so just hitting the average move will make it profitable, basically. Yeah.
Right, and there is also good info about the likelihood of success and risk reward. The better. I mean, the bigger, the better, always.
Exactly, obviously.
That would be just an easy way to go about it. And one thing we can do, we can just put it, if you don't want to put the position like in the broker, on the paper or on live account. I think this is good thing about EarningsWatcher, that it's really easy to put a lot of different position without like extra work to go into demo account. I can just put paper trade.
And you basically are practicing. You practice different positions, different sizing. and how you would exit them also, tomorrow, depending on what actually happens. We see basically how the scheduling works that we talked about. You do this before close, the day before, and then the exit will happen the next day after open. So a good example how to schedule basically of, okay, I need 15 minutes, 20 minutes to do the execution at these hours, and that's it.
And you schedule also after at the market open, that you need a window where you check the positions. I think it's better to have a time also before to read the earnings, like what actually happened. Because
definitely, this is, by the way, another perk of playing earnings, is that whether you like it or not, now you know about all the news and updates and things that are happening, and so it also gives you sort of a general knowledge about the market as these earnings go. As we wrap up, are there any things you'd like to share to our audience about your your own experience and own things you done, things that you think perhaps you feel could be helpful?
Yeah, I think the options and basically investing and trading, you can set your risk and reward how you want it.
Exactly.
So I think for me it's less risk than the market, real
or
estate.
crypto, or things like that. The edge is that exactly you can really calibrate your risk reward and know what you're getting and be comfortable with it. So that's really a good point. All right, Marek, thank you very much for doing this. I think it was a lovely discussion, and we'll see you all in a next episode. Thanks, Marek, again.
Thank you for having me.